this whole narrative that the kite is flying again on 50 basis points, our guests have said, tuck it away. What do you think of the journal article? What do you think of the risk of 50 basis points, the risk and necessity?
Yes. Well, good morning. Thank you for having me. I don't think we can rule out a 50 basis point cut. I think the important thing that we've emphasized, though, is that the depth and the drivers of this rate cutting cycle really matter for corporate credit sentiment and I think risk assets more broadly. If there is a start to the cycle that begins with a 50 basis point rate cut, I think the messaging needs to be very crisp around where the neutral rate is, why we are starting with a non-traditional magnitude of cuts, because absent that sort of clear messaging that we are doing this to get back to a neutral territory, I think the market could interpret that to mean that they are responding to some sort of growth downside. So I think the messaging around the drivers is really important. And then more broadly, leaving kind of this year's rate cuts aside, we believe that there's scope for the Fed to cut to the, say, call it 3.25%, 3.5% range next year. And then we need to start having more clear conversations around where is neutral, where is the destination. It's not to say that they couldn't cut beyond that level, but I think once we start to get in that zip code, I think it becomes a more finely balanced decision as to are we normalizing or are we actually easing.